Hey guys, it's Matt again from Hedge, and I'm here to bring you another educational video. But before we continue, first I just gotta say something. It's not financial advice. We do not accept liability for losses you may incur, and as long as you understand that this video is for educational and news purposes, we should be okay to continue. Now, with this in mind, today we're going to be talking about a really heavy subject. It's basically, I'm going to be picking off from where I was at my last video, which is the death cross. This is something that's actually really scary because it's like a death cross. When you see that, that's very bearish. That's something that the whole community could agree, like it's not good that this happened. And this death cross is the result of hash power basically falling from China. Now things are kind of fuddy and we're not exactly sure what's about to happen, but this is why I'm here today, is to clarify things. We hit that death cross. What a death cross is when it's the 50-day moving average crossing below the 200-day moving average. And that as a technical indicator is just saying like, oh, once we make that cross, if we continue slipping further, that could be a sign that we go into a bear market. And we could be seeing these kinds of prices, dips like this, for let's say a month to come. We don't know. We could see another crypto winter. We could see a 1 month bear market. We could see a 5 month bear market. We really don't know. It's very complicated here because in retrospective, a lot of people don't understand something about Bitcoin is this. $100 million moves it roughly about 1%. You've seen the amount of money that's been going in and out of Bitcoin. The same way that it could drop 30 to 40, 50% overnight, it can move 50% upwards, downwards or upwards overnight. So it becomes very complicated for someone to say like, oh, we're in a bear market or in a bull market at this point, because now the whales are in. The institutions are in. They're going to do whatever they think is most profitable to make, I guess, the price react in whatever way they want. Now, with that in mind, this makes the whole community very much divided because some people are like, no, this bull market can't be finished. And other people are like, this is a sign of a bear market. Every time we see these things play out, this is what happens. So it becomes complicated because people are like, it can't be out. There's too much bullish news. And other people are like, the technicals and every other aspect say it's bearish. So with the whole community butting heads, it's very hard to actually, think for yourself, like, what decision am I going to make? The best thing you could do is, like tune out from the noise and think about what's best for you. This death cross and this drop could actually be considered a potential blessing in disguise. And you might be asking yourself, how could this be a blessing in disguise? The price dropped, things aren't looking good, everyone's thinking they lost their money. Well, think of it this way. If you were willing to buy at 50, think about how many people are willing to buy at 25. Then you gotta ask yourself, if you saw Bitcoin drop down to $10,000, considering it had an all-time high of 60, 70, wouldn't you say, hey, that's could be a potentially a good buy? Because you gotta think of it like this. A lot of people were wishing like, oh, I wish I bought all these coins earlier and this and that. It's like, well, now it's technically an opportunity. If this is a bear market, the best thing to do is to accumulate. Because then when the bull market starts again, doesn't matter. It could be it could come early. It could come in 4 years at the next halving cycle. If you make it through the halving cycle, you're going to see some excellent rewards. Another thing to say was that when we do reestablish ourselves, as more and more countries make Bitcoin legal tender, it's going to just help with the decentralization of its mining. And if that happens, we could be entering the new era of mining decentralized without having one player control it all. That would be great globally for everyone to be able to share that wealth. And if we keep it all in one spot, we saw what kind of issues we had. Seeing how China dumps it, one thing does this, one thing does that, and the whole market hurts. Whereas if everyone gets involved, everyone gets their little piece of the pie, and then less of it is affected when there is something like this that happens. And it even when you look at it from terms of like even just COVID, think about how much of the world grinded to a halt when they couldn't get their goods from China. It just goes to show like a lot of production goes on there. This should be a wake-up sign that everything should start being a little bit more decentralized, more local internal economies. And then whatever we need externally, we could trade. We don't have to do things the same way we did economically. More or less, that should give you an idea of where Bitcoin could be heading. And the whole community is divided. MicroStrategy's buying like no tomorrow. Hedge fund managers are getting in. Big players are getting in. People need to understand that when big players get in, when they have billions and trillions of dollars to throw, do you expect them to buy wholesale Bitcoins at $60,000? No, they're professionals. They play with stocks and they do accumulations and they drop markets as much as they lift them. It's not in our hands anymore as retail traders. It's our job to ride their waves, because now that they're in, they're going to do whatever they think is most lucrative for their position. Meaning that if they decide they want to rip the rug out from under people and scare out the paper hands and buy everything, they will. And they won't stop until they think that everyone is shaken out. Because when the next leg comes up, it's going to be a big leg. And people are going to FOMO back into that leg. And when they do, it's going to make the price move to probably heights we haven't seen. And with that in mind, that's our ceiling, and the potential floor is 0. So if you can't ride those potential risks of, let's say, 30,000 to 0, do you really think that you should ride the potential gains of 30,000 to 300,000? The ceiling is higher than the floor is low. So with that in mind, I'm going to wrap up this video, and I just want to remind you this is not financial advice, this is my opinion. Like, comment, and subscribe, and follow our next video for more information.